everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, great. Looks like we're up and running fine. If anyone has any issues with anything as we go along, feel free to let me know. As always, keep in mind that there's risk involved with trading. No one trade is guaranteed to profit. So you want to manage risk in a way that makes sense for you. And we'll go over some ideas in that regard with some of the advanced tools in our web trader and AvaTrade Go mobile app. And also keep in mind that what we're covering is coming from an educational perspective and not to be taken as financial advisement. Real quick, what is fundamental analysis? If you're new to things, basically it's the news. There are different types of fundamental analysis or different types of news that we can look at. It could be regularly scheduled events like on an economic calendar, which we'll look at some of those today and some trading strategies around those types of announcements. It also could be other types of headlines, extraordinary news that's not scheduled that can affect the markets as well. And as that type of news comes in, we can look at those sorts of things as well. And the Market Buzz feature helps us a bit with that because it pulls up the most recent headlines and news articles surrounding different instruments that you can look at before you trade. We'll take a look at that feature as well. As we go along, if you have any questions or want to give any input, feel free to do so in the question chat box that's available there. Now, from our main website, we can log into the web trader, which allows you to trade on the MT4 and MT5 accounts from one location with the advanced functionality and features that you don't find in the MetaTrader platform that are available in our web trader and mobile app. And the same functionalities you can find on our AvaTrade Go mobile app, which also trades on the MT4 and MT5 accounts with those advanced functionalities that we're about to use some of them now as we go through some ideas for the fundamental news situation. So we can go ahead and log in the upper right corner of the website, and we'll be in the web trader. And we can start either with the economic calendar, maybe the Market Buzz feature. Let's go ahead and take a look at the Market Buzz feature. And basically, you first choose which instrument you're interested in trading on, and then it gives you a breakdown of not just the technical analysis, but also the fundamental news that's coming in surrounding that. So we can look at individual stocks, and the bigger the circle in the pictogram, the more it's trending online, the more mentions and articles that were found on it. And we can switch categories, stocks, cryptos, currencies, commodities, etc. Maybe we look at the indices and pick one that's trending nicely. We can see that the S&P 500 has 525 mentions online. So let's take a look at that. We can see a quick breakdown of the expected price movement in the coming hours and days. Looks like not a big rise, but a 3.9% rise expected on the S&P 500. We can click on that and look at the trend analysis. We can see the price levels that it's predicted to rise to potentially, and a breakdown of the indicators that were used, RSI, etc., in that analysis from a technical perspective. Now, from a fundamental perspective, we can use this area to look and see, are there articles that might tell me something about the S&P 500 and what I might want to do with it? And so you can scroll down through and look for articles that might be relevant and read the most recent news surrounding the S&P 500. Okay, and so some of what you might find might conflict with the trend analysis. That's okay. You can take a look and see if you see things that help you decide which way you think the market might move. Okay, we can see, this is interesting, from a few hours ago, Asian shares fall as Wall Street retreats, ending record-setting rally. So there's been a rally. Stock market's been rising for weeks all around the world. A small rise is still expected from a technical perspective, but a few hours ago, there's an article that might give a conflicting story and you can read the whole article. And as you read on, the Asian market opens before the U.S. market, right? Asian market, European market, then the U.S. market, etc. And so it goes on to talk about what's happening currently today with a pullback, and that maybe the rally has lifted itself out, etc. And many times as we end the year, there is some profit taking from the equities, from stocks, etc. As the year closes out, which maybe could play into why this article is talking about a retreat after a long rally. Okay, so it's important to get a variety of information as you decide what you want to do on a particular instrument. And the fact that, a while back you looked at this trend analysis and it showed price may rise 15% maybe. Okay, and so now you start to look and you see price may rise 3.9%, and you say, okay, there's less of a bullish trend analysis here. While still it shows expected rise, it's not nearly as much as the expectation was maybe a couple weeks back. And then you read some of the articles and maybe they're alluding to the fact that maybe the rally's done, there could be a pullback, Asian stocks are dropping, etc. Okay, so once you've done an analysis and decided, okay, maybe I'm going to look for a high point to sell from, maybe is your analysis, that maybe this rally is slowing, then now from a fundamental perspective, you have a direction that maybe you prefer. And so if let's just say, for argument's sake, you think that there could be a pullback on the S&P 500, that maybe this big rally upward for the past weeks has slowed. And here are the 1 week candles, by the way. We can get rid of some of these old lines that I drew from past sessions that are down quite a ways. And you can see these are 1 week candles. Look at that climb. It looks like a mountain going up here. That's how many weeks in a row we're green. 1, 2, 3, 4, 5, 6, 7 green weeks in a row. And this is the first one that's not green so far. The week's almost done. Could end up green, but right now it looks like it's trying to turn red. So from a technical perspective, we see a long rally and some hesitation now for the first time in weeks. And we see an article saying Asian stocks are dropping and maybe this long rally is slowing. We also see a technical signal trend analysis that shows, hey, it might go up 3%, but not 10 or 15% from that analysis. So now you can start to look and say, if I was going to short this, the expectation is no more than 3% or so rise further. And the fundamental news is alluding to the fact that maybe the rally is kind of done. And we did see a bit of a sell-off last night, okay, on the equities. And so, if we go to something like 1 day candles, we'll get a little different view. Okay, here's the drop from last night's sell-off, yesterday's sell-off, and then a bounce up right now. Okay, and maybe that's why there's this expected 3.5% rise. It is bouncing after that large drop, but perhaps it'll have trouble getting above the high. Okay, potentially. And so we can start to look at smaller candles, 4 hours. And this would be interesting. Let's look if there's a signal, a live signal right now in the S&P 500. And there is. Okay, this little symbol means there's a signal. So let's look at the technical signal to pair with our fundamental situation. Here's the rise that's expected. We saw that. It's expected to go to these levels here. Okay, and this will be interesting to look at because the levels that it's expected to rise to are not towards the all-time highs that it reached recently, but only towards the recent support levels that were broken. And so 47.89, if we draw a line there, let's see, 47.89 is here. Okay, so the first level in the trend analysis where it's expected to rise to is, perhaps they say take profit at 47.89. Why do they say that? If you follow it across, that's a resistance level back here from last week or earlier this week. Resistance down, and this is actually last week here. And then this week it broke above and found support there. Okay, before rallying to all-time highs, and then the drop where it broke this support level. So that's a significant drop. It's a reversal of a long uptrend where we see it broke this old resistance, which became support this week, and broke below that. So they're saying if you do buy, they don't expect it to break much above the first resistance level. That's where they're saying take profit on this short-term buy signal. And it very well could go up there. The furthest they're saying to wait to take profit is 48.08. Let's draw where that line is. So 48.08 is right here. Okay, again, uniquely placed below the old support level from yesterday before it broke it. So there's a support level from last week, which was old resistance. Okay, and then a support level from yesterday, which then was broken. And they're saying if it does go up, they suggest taking profit at one of these two resistance levels, because apparently they don't expect in the short term for it to go much higher. Okay, so in the short term, yes, it's a buy signal. In the bigger picture, we see that there was a couple broken support levels reversing a long uptrend that went on for weeks. Okay, and then in the fundamental news, we saw headlines saying rally could be over, Asian stocks are dropping, US market now hasn't opened yet today. So perhaps even though our indices are moving before the US market opens, perhaps when the US market opens, it could do what the Asian market has done, which we just read an article saying that there's a lot of bearishness in the Asian market right now. Okay, so with that outline, then we could say, if you indeed decide, okay, I want to sell, even though the short-term signal says buy, the fundamental news looks somewhat negative. And so I'll use both of those together for a strategy. Okay, so if I am going to sell, because the short-term signal says it could rise to these levels, then my stop loss should probably be above that. Because if it breaks above those levels, then it's not just a short-term move up, it could be something more, right? And if we're right about the negative sentiment, then it probably shouldn't break above these short-term resistance levels. It should, if it does reach here, eventually reverse and drop down further as the US market opens today maybe. And if we're wrong, then we take a small loss if it breaks above these resistance levels to our stop loss up here. Okay, so I'm using the buy signal to find the resistance levels for an actual move in the opposite direction. Not to say you couldn't buy on that signal in the short term, but this is a longer term move that we're hoping through today and tomorrow maybe could carry out in the other direction. Okay, willing to risk that 3.5% or whatever move on this instrument that's expected maybe to go up. Okay, so and by the way, you don't have to risk 3.5% of your balance to get through a 3.5% move on the chart. And what I mean by that is we can adjust our trade size for whatever stop loss position we put. So if stop loss is above these two resistance levels, going with the fundamental news that's calling for kind of a pullback after weeks of rallying on this index, then we put our stop loss above these short-term resistance levels, hoping they hold. Small risk. Then we look at the larger candles for potential take profit, which could be right here. Okay, you see, without having to break any support levels, it's already broken down here to a downtrend. Now, if you take profit in this location, it's before it would even have to break below this old resistance that it broke above, which now could act as support if it does drop down to this level. So a take profit somewhere above this line puts you in a spot where it doesn't even have to break a major support level in order to take profit. Okay, so take profit at, let's say, 56.20 or somewhere above this line, 56.30, right about, let's say, there. Could be a spot that might make sense for if you're planning to short this. So 46.30. Okay, and then stop loss up above the two resistance levels, which we outlined on the smaller candles. We can see it better. here. 48.15 is above this resistance and this resistance from the signal. So 48.15. Okay, so sell position, potential profit 28,900 USD, risk 8,100. Okay, so it's a nice ratio, potential profit to risk, but maybe I don't want to risk 8,100. Depends on your balance and your risk tolerance, the amount you want to risk. So now that we've got the stop loss price determined based on the technical analysis signal, and our take profit spot determined based on our own technical analysis from those one-day candles that we looked at here. Okay, take profit determined just before this support level. Then now we just need to adjust the trade size to fit the risk management that you would want. So if, let's say I want to risk 500, then I need a trade size, 12, 14 times smaller. So now I go and I say, okay, not 2 lots. Let me do 0.05. And let's see risk reward. Now I'm risking 205 to make 720. Okay, so I can go a little bigger. 0.12. Now I'm risking 489 to make 1700. That's starting to sound better. If my target risk per trade was 500, 0.13. Okay, 526 to make 1878. So I could be a little above 500 or a little below 500 on my risk side, depending which trade size I want to take. So I'll go a little below to try and make 1700. Okay, so the risk management is done for me within the order window in terms of calculation from my lot size. And then I take the trade size fully aware of how much I'm risking, what my potential profit is, other than the swap charges, because I might let this run several days or even longer. All of the risk is calculated for me there to the stop loss price. And I understand there'll be some overnight interest potentially on the trade as well, which typically is pretty minimal if we're looking at a few days or weeks compared to the potential profit. So we've got one trade placed, and you'd say, wow, that was a lot of technical analysis involved in that. And there was some technical analysis involved, but it all started with the fundamental analysis first. Looking at some articles, and I could have read on to more articles to be even more confident in my potential move. Okay, then I used some technical analysis. I took advantage that there's a signal on it to help me with my support and resistance levels, and even with a short-term signal saying to buy, which I think I kind of agree with. It's bouncing back up a bit right now. The longer-term move could still be in the opposite direction based on the fundamental news. It's the end of the year. Maybe there's profit taking at the end of the year on the equities, etc. Okay, so that's one place we can go for fundamental news. You don't necessarily have to make a move on US 500. That was just an example based on one article we looked at. You could read 7 or 8 articles on it and make an even more informed decision on any instrument, for that matter, using the market buzz. Now, where else can we go for fundamental analysis? We could go to the economic calendar is another place within our app and WebTrader. So there are a number of large announcements today. By large, I mean they're ranked in terms of importance as high-level importance on the economic calendar. Some already came in, some are yet to come. Let's look at some that you still could trade on that haven't occurred yet. So we can look at something like the GDP out of the US, we can look at jobless claims, etc. So let's maybe look at the Philadelphia Manufacturing Index, which tends to lend to it some predictability in terms of what direction would US dollar currency pairings move based on how the numbers come in. So we'll go over and we'll use this set of tools over here to analyze the past time that this announcement came in. How did the market move based on how the numbers came in? Okay, and so let's click on the volatility tool. And we say Euro USD pairing. We can use any pairing we want with the USD. We can do different time frames after the past announcements to see how did it move after the last announcements. Let's leave the longest time frame, 4 hours, and we can qualify. Did the announcement come in better than expected, worse than expected, or as expected? Okay, if we leave it on all events, it's pretty much 50-50. Went up about half the time, went down about half the time after the numbers came in. But if we start to qualify it and say, what if the manufacturing index comes in better than expected, above forecast? What happens then with the Euro USD in the 4 hours following those types of results? So above forecast, we see that 75% of the time, the US dollar strengthens and pulls the euro down if indeed the manufacturing data comes in better than expected. Okay, and we see a range movement of about 46 pips, a little larger than that. Okay, and you can see the individual movements. Down 43 pips in the end, down 15 pips, and the one time it didn't go the correct way, up only 5 pips. And here's one that went down about 3 or 5 pips, etc. So the majority of the time, downward movement after 4 hours. One time it went up. Okay, it's not huge movements down, but it's certainly a lot more downward movement than up. What if it comes in below forecast, meaning worse than expected news for manufacturing data out of the US? It's the flip opposite, right? 71% of the time then, it went up. The euro went up against the USD, meaning the US dollar weakened if the data came in worse than expected. And you start to think, okay, the data maybe supports what you would have believed should have happened. It makes sense maybe in your mind that if manufacturing data was better than expected, the US dollar would strengthen and pull the euro down. If manufacturing data out of the US was below expectation, then the euro would go up against the USD, which it did. Okay, so, and we start to look the range movement over 61 pips, okay, after 4 hours. And you could say, yeah, but that's after the numbers came in. Maybe in the first minute it already moved. And so you can check that. You can say, well, what about after 5 minutes after these announcements? You know, after 4 hours, it's over 61 pips range movement. After 5 minutes, it's only 17 pips range movement. And look, 4 of them actually went down. 13 pips, 18 pips, a few pips down, and the ones that went up only went up about 20 pips, okay? And 4 of them actually went down in the first 5 minutes. So if then you bought after 4 hours, 75% of them ended up, okay? So even these ones that only went up 20 pips, 22 pips after 4 hours, you might have actually made a larger profit than that because in the first 5 minutes, most of those pulled down before they went up. It was a false move. They went the opposite direction than what they ended up after 4 hours. And we see that effect often. The ones that when it came in above forecast and ended up down after 4 hours, in the first 5 minutes, did any of them have a false move? A couple of them went up in the first 5 minutes. Those that went down 16 pips or 2 pips, right? And after 4 hours, maybe we're down 45 pips. This one was down 16 pips in the first 5 minutes, ended up down 45 pips. This one was up in the first 5 minutes and ended up down a few pips, 14 pips after 4 hours. So you can analyze this data as closely as you wish and start to see that maybe there's a relationship here based on the past data that if the numbers come in a certain way, then you can expect the movement to go a certain way on, say, the Euro USD or other currency pairings that you might check out to have an idea and a trading plan that when this data comes in, if it comes in like this, I'm going to trade this direction. If it comes in like that, I'll trade the other direction. Okay? And so very useful data, very useful tool here. I see a question has popped up. How can a person manage to lose no more than 1% as an example per trade? So exactly like I showed you in the order window, when we were setting up that trade on the US 500, I adjusted the trade size so that it only risked about 500. If my balance is, say, 1,000, then 1% is $10, right? So if I want to risk $10 per trade, then once I set up those take profit and stop loss prices, then I just need to change the trade size until it shows that the risk to that stop loss price is $10. Or if I have 10,000, then 1% is $100. And I adjust the trade size until it's risking the amount that I want to risk on that trade. So going into it, just know what amount is 1% of my balance, and then adjust the trade size so that in the order window, it's showing that that's the amount you're risking on that trade. So it's a very simple process when you use the order window on our platform and app, because it calculates it for you. Very good question, Vincent. Okay, so besides the US announcements, where we see maybe a relationship with the manufacturing data that could clue you in as to which way you might want to trade, are there any other announcements today that you might want to look at? Now, the Canadian announcements are at the same time as the US announcements. And from experience, you tend to get a bigger reaction to the US data than you do to the Canadian data, which comes in at the same time. So, you know, an example, if I queue on the Canadian retail sales, a lot of times I will see not a huge difference. If this comes in above forecast, look, the results are 50-50. Even though the data on retail sales in Canada on these announcements came in better than expected, above forecast, the results half the time went up and half the time went down. Why does it seem like there's no effect from data that came in better than expected out of Canada? Because the focus is maybe not on that data, because it's coming in at the same time as the US GDP data and manufacturing data and jobless claims data. So it has an effect to kind of cancel out momentum that might have been caused from this announcement, because the US announcements were at the exact same time. Okay, maybe if we look at not USD Canadian, but maybe a Euro Canadian pairing or a Canadian JPY pairing, we might see a more relevant set of data, because let's factor out the US dollar effect. So if we look at Euro Canadian, now we see an advantage. Retail sales out of Canada, if they come in above forecast, the Canadian actually weakened 75% of the time. So we see a statistical advantage to buy in this circumstance. It's like maybe the strengthening occurred before the announcement, and then the Canadian actually weakened with good data. We could speculate as to why would the Canadian weaken when retail sales were above forecast, but indeed that's what's happened 75% of the time in the past. And if you're using data-driven trading, you can trade based on the data, not on what's logical to your brain. Okay? And so what we see here is when you pair against the euro, you do see statistical advantages. When you pair against the USD, Euro USD, if I can find it now, or I'm sorry, USD Canadian, we're on Canadian pairings, USD Canadian, all of a sudden I don't see that statistical advantage. So that's kind of a lesson to learn too, that if you have announcements at the same time, if you want to trade on one in particular, maybe don't include a pairing that includes the other that has announcements at the same time, right? Unless you're going to consider both announcements, and only if one is better than expected and one is worse, then you trade, but that gets a bit more complex. So if I'm trading on the US announcement, I'm probably not going to do USD Canadian, I'm doing Euro USD. And if I'm trading on the Canadian announcement, I'm probably not going to do USD Canadian, I'm probably going to do Euro Canadian or Canadian JPY, etc., to try and factor out the other set of announcements. All right, so, but is there something maybe tomorrow? Since that's the end of the announcements I see here for today, at least the significant ones that I've filtered for, I can look at tomorrow. And what I see going into tomorrow, we have some announcements out of Japan that are high level that you could try to take advantage of, out of Great Britain, and out of the European Union, okay, France in particular. So Let's maybe look at the UK announcements and retail sales. So the year-over-year retail sales, if they come in above forecast tomorrow, the results look 50-50. Below forecast, not significant difference in the movement up or down. So the retail sales don't look like something that lend a high amount of predictability based on how the data comes in from the past, at least year over year. What about month over month? Maybe there's more of a focus on the change from one month to the other by investors. So if we analyze the month over month data compared to the year over year, if they come in above forecast, there is a statistical advantage to buy on the pound. If they come in below forecast, there is a statistical advantage to sell on the pound, 60-40 in either direction, depending whether it's above forecast or below. So sometimes if you look at the list of announcements, you see, in this case, the month over month numbers lend to it predictability based on how the data comes in, more so than the year over year numbers. You see M over M versus year over year. The month over month data looks like it's statistically better to trade off of once you see how the data comes in, okay? And we can look at the GDP numbers as well. Perhaps the GDP numbers that are coming in at the same time, by the way, create more predictability. If the GDP numbers come in better than expected, it's 50-50. If they come in worse than expected, it only happened once. But then the pound dropped, and that would make sense. The GDP was worse than expected out of Great Britain, then the pound weakened the one time that happened. So that's not a large set of data points, right? It only happened once and it dropped. So that's not something I'm probably interested in trading on because it's not a lot of data points in that analysis. So the one that looks strongest to me out of all of these is the retail sales month over month. Had a lot of data points, and 60% of the time, depending which way the numbers come in, better or worse than expected, the movement lent to it a 60-40% statistical advantage from the past. Now, if it comes in as expected, matching forecast, only one data point, only happened once. So 1 out of 1 doesn't convince me. It might you, but for me, I like to see more data points for however it comes in. Okay, so you have a lot of opportunity here from the economic calendar. There are other high-level announcements out of France, etc., Belgium that you could look at too to see if there were big movements surrounding how the numbers came in the past. And you can do this for each week in advance. These are listed here weeks in advance. So each weekend I can have a plan where I'm going to look at the high-level announcements for the major economies around the world and look which ones had the largest statistical advantages from the past based on how the numbers came in, and then have a plan for the week for those announcements that I'm going to pay attention to that data as it comes in, and depending how it comes in, if it showed a statistical advantage in the past to buy or sell on certain currency pairings, then I will, okay? And you can have an idea of the distance that it moved in the past so you know where to maybe put your take profit and stop loss, etc. All right? All right, so I'm looking at another question that popped up. What is the real value shown in the data? How is it different to the trade value? I'm not sure I know what you're talking about. You might have to expand on that. I'm not sure where you're seeing the real value versus trade value, etc. Just maybe expand on that idea and I'll try and help you. Okay. I think this is a good place to stop to see if there are any further questions before we end things. I'll pause for a moment to allow any questions to be typed. Okay, I don't see any other questions popping up or a restatement of that past question that I didn't quite understand. Maybe next time if we didn't get to something you're thinking. Good luck with your trading. As we looked at, there are a number of announcements coming up that look like they could be nice to trade off of the results on based on the past data from the economic calendar. And also take a look at that market buzz. There are a lot of articles popping up on all the different instruments that are tradable with us, and perhaps like we simulated there in the S&P 500, you might see something there that convinces you which way you'd like to trade based on the articles coming in. and also the trend analysis that we looked at that's provided in that market buzz area. All right, everybody, thank you for joining. Until next time, good luck with your trading and good luck with any moves you might be taking now. All right, bye for now.